Welcome to the MZ Burning Glass Studio for this monthly live JOLTS analysis. Every month, the U.S. Bureau of Labor Statistics releasing their JOLTS analysis report, which stands for Job Openings Labor Turnover Survey. Just one indicator for us to see the health of our economy. On this May 3rd, 2022, I'm your host, Christopher Laney, and I am joined by two MZ Burning Glass economists, Chief Economist Bledi and Senior Labor Economist Layla O'Kane. Bledi, Layla, welcome to the studio.
Thanks so
Good morning,
much.
Chris.
Good morning to you. So the report just came out. So I'm excited to have you on and do this live analysis with you. So Bledi, I'm going to start with you. Can you give me just your immediate takeaways from this report?
Good morning, Chris. My immediate first takeaway is that you are too serious. But on the second hand, we have the numbers, and we have record high job openings at 11.5 million, hires and separation pretty stable compared to the previous months, and we have record high quits. So a lot of record highs in this job report.
Seems to be a common trend each month. Layla, I want to go to you. So I'm not going to ask for your initial thoughts, but there's something that continues to come up in the report, and that is the differences between durable and non-durable goods. And we are seeing some indicators in this specific report. For our audience, can you just explain really quickly what's the difference between durable and non-durable, and why does it matter in this specific report?
Yeah, sure. So durable goods are things that last, let's say, more than 3 years, whereas non-durable are less than that. So things like, food or other things that would sort of disappear within that time frame. And what we're seeing in this report is that openings are up in both durable and non-durable goods, and quits are about the same as they were last month in durable goods, but quits have gone up from 3.3 to 3.6 in non-durable goods.
So I want to stay with you for a second, because when we start to break down this report by industry, one of the industries that was noticeable was the fact that job openings decreased in hotels and restaurants. But we kind of know that people are out and about and they are going to restaurants again. I wanted to get your initial thoughts on that. Why do you think that job openings are decreasing right now in this specific industry?
Yeah, so openings are down, and we're also seeing quits in accommodation and food services to be about the same as they were last month, which just means overall that we're, as you're kind of indicating, losing people in that industry. And I think that's just because people are kind of worn out. There's demand for restaurants and demand for hotels, and that's going to keep going up as we hit summer travel and as we see, folks who have kids out of school kind of get ready to travel a little bit more and maybe go out and about a little bit more. And I think that industry is going to be sort of struggling to figure out how to replace those people who are leaving.
Yeah, that's a good point. Bledi, similar to you, one of the other industries that we saw job openings decrease a bit in is transportation. But we know that there's a demand for transportation. We're hearing it every day when it comes to the supply chain challenges. I wanted to get your thoughts on why do you think we're experiencing that right now?
Well, actually, I mean, there's been the opposite theme in the discussion in the past couple of months. Actually, there is a lot of discussions at this moment that we are probably seeing the early stages of a transportation recession. Again, there's a lot of debate around this, and I do believe that these numbers will just fuel that discussion. But again, we saw an overshooting in 2021. Again, there was a very high demand. But in the past couple of months, we are seeing some indications of the transportation and all of the logistics and supply chain actually going down. So I do think that this partially confirmed that. I would personally wait a little bit more, a couple more months to confirm, but it is an indication of that.
Layla, we know we're in a hot job market. We talk about it regularly, and we have all these record highs, as Bledi initially said at the beginning. We saw a decline in GDP in the first quarter of this year. Do you believe that this is an indicator that maybe the job market might cool off a little bit, or just not enough? It's going to be hot all year.
Great question. Yeah, so I think this could be the peak of the hot job market. So with GDP declining in the first quarter, as you mentioned, it would make sense for the job market to cool off sometime in the near future.
So we've talked about this, throughout the few minutes we've been together, but we saw a record high in quits. Bledi, I want to go to you. This record high of 4.5 million quits that we just saw. What does this mean? the last couple of months when I asked this question, I always ask, are we going to continue? Are we going to continue to see more people quitting? And we saw an uptick again once again this last month. So my question to you is it continuing? What is happening?
Again, I mean, in general, I would not read too much into month to month, variation. There's seasonality effects. There's also an adjustment that happens. But again, the quits is something we've been seeing for a long time. And also the quits are happening mostly in sort of a blue collar type of jobs. So I originally expected this will essentially change and maybe see more on sort of the white collar. But I think that is the area that we're going to continue seeing more and more quits. So I do not believe that we, at least for 2022, we're going to see a significant decrease in the quits. The economy is hot. People believe they can find jobs. They want, and they see that by quitting, they can get higher pay. And so that trend is going to continue.
Yeah, the competition, the battle for talent continues, as we've said here over the last couple of months. Layla, I'll go to you for just some final takeaways in this specific report. Maybe 3 takeaways that you see.
Yeah, absolutely. So I think the main 3 takeaways are, first, that the job openings was at a record high, 11.5 million, and quits was also at a record high of 4.5 million. And so we're seeing a really, really hot job market here. I mean, I think the last thing to know is that we had about 52 unemployed people per 100 job openings, which is a record low in the last 50 years at least. And so we just really see the great reshuffling continue.
And Bledi, so as we know, in the next couple of days, this Friday, the jobs report comes out. What does this report mean, and what should we be looking at for this Friday's jobs report? Any kind of signs or indicators that we should kind of keep an eye out this Friday?
Well, I expect the theme to not change much. And again, remember, the JOLTS and the job reports used to have significant lag before. Now they're closer to each other. I expect the jobs report is mostly going to confirm what we saw today, which essentially the economy is very hot. The economy is not losing steam, and employers are still having hard time finding employees. I think, again, all of this together, they mostly mean that inflation is also probably here to stay for a lot longer. But essentially, I do expect to see similar results. And again, you need to remember, then yes, it is true that there was this headline about GDP falling, but there was a lot of debate around that, if actually that was the real effect, or was actually because of different accounting and how we're estimating GDP. There was a lot of discussion, a lot of economists saying that this was mostly accounting effects, and essentially how are we measuring, and demand is still very, very strong, and we just cannot yet produce what we need to. And essentially that is what we're seeing today. We're seeing employers demanding and needing employees, and I expect to see similar things in the jobs report.
Bledi, Layla, always a pleasure. Thank you for joining us on this live analysis this morning. I know it's always hard to get in there and just start diving into the report really quickly. If you want more information about this report and our analysis, visit mzbg.com. Thank you for joining us.